Hi traders, in this video we're going to be taking a look at the chop zone indicator. So what this indicator does is basically shows you if we are in a downtrend, an uptrend, or a range. So you can see the indicator here below my chart. This is the MT4 platform, pound dollar 1 hour chart. The indicator is very easy to read. I've color coded it red, green, and blue. Basically, when it's red, it is signaling for a bearish market. When it's green, it's signaling for a bullish market, and blue is for a ranging market. So the main purpose of the chop zone indicator is to avoid trading when there is a ranging market, or let's say a choppy market, hence the name, the chop zone indicator. That being said, if you do want to trade in ranging markets, you can do so. However, for the purpose of this video, we're going to focus on using this indicator to filter for trends. As you can see, it does a good job of helping you visually see trends. I mean, you wouldn't necessarily need it. If I just move it down there, a simple trend line would have done the job. However, I do understand it can make make things easier to interpret for some traders, and it's just nice to look at, if not a bit hard on the eyes, because you can clearly see from here at a glance, all of those green bars suggest this is a upwards moving market. Likewise here, when you see all of this red, you know straight away that this is a downtrend, so you'd be looking to sell. If we go back to the buyer's market here, so we've established from the chop zone indicator that we're not in a choppy zone, because then it would be blue like it is here. You can see majority of blue bars, and the market there is slightly choppy. Therefore, you wouldn't be looking to enter this buy trend when the indicator is showing the choppy zone. However, anywhere here and here, you may consider taking a long trade. So now the question is, how do you know when to enter in on this trending market? I personally wouldn't enter when it immediately turns from red to green, because you could end up being, ironically enough, chopped in and out of trades. I'd wait for it to form a good trend like this, and I'd look at the charts, and I'd want to mark off key levels, such as if we were here and you can see the market is trending up, I would mark these resistance here, 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 and here. See some nice greenery there, and then I'd look to trade on the breakout there. Put the stop loss below the support level here, which is just 20 pips, which is a tight stop loss for the 1 hour chart time frame. If we zoom out, you can see that this trade had the potential of almost 350 pips, which would have been a great entry. The chop zone indicator helped us to filter which direction we were trading. It was just up for us to time the entry. We timed the entry based on a breakout of resistance in the first instance. As price was moving up here in this trend, we maybe would have looked to have used a trailing stop. For sure, when price came up around here, I wouldn't have panicked and exited the trade. You just would have left way too much on the table, unless you were re-entering. You can always scaling as well. When price came up around here, I would have moved my stop loss to at least break even, probably probably to this area here. Certainly as price continued upwards, I would have placed my stop loss below this level of support just to lock in 30 plus pips of profit just in case it turned around. At the very least, you'd probably want to move your stop loss to break even so that your winning trade doesn't turn into a losing trade if it did turn around. And as price continues up, you can always trail the stop loss when you have the other pullback here and a new level of support is formed. Once price continues upwards, the stop loss could have been moved to below here. Again, locking in more profit, potentially taking some off the table, closing part of the trade and allowing the rest to run. Other traders may, as I say, scale in and add to the position. Okay, same here. As price continued up, pull back, and then rallied again. You could have moved your stop loss up here. Again, price up there, stop loss underneath this level of support, and you're just locking in profit by trailing the move all the way up. Okay, it's arguably better when zoomed out to see the chop zone indicator and how it clearly identifies trending and ranging market conditions. Okay, there are numerous ways. If you didn't take that initial entry and you were late to the party and you saw your chart somewhere around here, you could have entered on the pullback. Okay, you could have marked this level of resistance here and entered on the breakout of that. I mean, the candlestick patterns are suggesting indecision, and then you can see the bulls are winning the race and price eventually shoots up. Various different chart patterns you can use. I mean, for example, you have a wedge pattern here. I've done videos on wedge patterns that you can take a look at. Just good to be aware of, but really it's just support and resistance, and the breakout there, you can see that big candle. Just zoom in on that for you. You can see that big candle there on the breakout of this wedge pattern. Perhaps a few traders were watching, well, more than a few traders were watching this level as it had a significant breakout, which would have been a good entry point on this trade. Confirmed as well with the green chop zone indicator there. Okay. Another way you could have entered in on this trade, this trend, is using another indicator. So let's just take shall we have a look at the CCI? So with the CCI indicator, you're going to wait for a pullback below the -100 level to enter a long trade, or to wait to enter a long trade. You can see the price fell significantly below here. You can wait for it to head back up and cross above, and that would have been confirmation there to take a trade, and there as well. Another indicator you can use is the stochastic oscillator. Basically, with the stochastics, you're looking for price to cross in or around this area to the 20 level is considered oversold. So when it's oversold, you can look to buy. You want the main line to cross above the signal line, suggest an uptrend. So you have this nice greenery here on the chop zone indicator, and we can mark off potential entry points based on the stochastic crossover. So there's one there, which wouldn't have been a bad entry. You could have waited for the pullback here, and again, a good entry based on the crossover of the stochastics. Funnily enough, the chop zone indicator here was actually red at this time, but that does emphasize that it can be lagging, which is why you want to use other indicators for further confirmation. You can see divergence to the upwards trajectory there on the stochastic oscillator, again suggesting that there's still plenty of momentum left in this particular move. If you did wait for the chop zone indicator to be green and stochastic crossover in the oversold area, you could have got in there. It's good to combine indicators along with price action analysis, support and resistance levels, candlestick patterns, just to make sure you've got all bases covered when trading, and sensible money management as always. So remember the breakout of the resistance, the trend upwards, chop zone indicator green. It's just about really timing your entry and your exit. Another indicator which is good for trending markets is the ADX. So you have the green chop zone indicator here. You're thinking, oh, when can I enter? When can I enter? When can I enter? With the ADX, you are looking for the green line to be above the red line. Red line is the minus DI, the green line is the plus DI. For a downtrend, you want the other scenario where the red line is above the green. So once that's been established, the next line is this main line here. The higher that line is, the greater the momentum. It does mean that if it gets too high, the momentum can be exhausted and perhaps the run will come to an end, although not always the case. I do mark the 20 level on my ADX indicator. You can add any level you like. Some will add 25, some 30, some won't have any level at all, and we'll just take it at a glance. But generally speaking, for me, anything above 20, there's momentum. Anything below, the market's perhaps consolidate in range, and I would look to maybe avoid taking trend-based trades unless I'm looking to get in on a pullback. So in this instance, with the ADX, we want the green to be crossing the red and the main line to be above 20. As it is there, the level of support we have here, 1, 2, 3, 4 times. Price begins moving away. ADX crosses up. That could have been a potential entry point. However, you're trying to get in at the bottom here, which is fantastic if you can, but there will be times when you'd buy there and it will just continue going down and you can just get whipsawed in and out of the market. So it's not a bad idea to wait first for the trend to form. There will be other opportunities to get in. As you can see here, the ADX crosses to the downside and then back to the upside. So that could have been another entry. You've waited for the trend to develop. You've avoided getting whipsawed in and out of a uncertain market. You can see the bullish price action, and you've still got an early opportunity. You know, you've that resistance we were looking at earlier still there. You've got a wedge pattern. So all signs of a bullish trade opportunity there. Again on that pullback, ADX gathering momentum, green above the red, confirming that potential entry there. Okay, again, wedge pattern. So there's many ways you can time your entry. Let's just say you entered here on this breakout. You could have put your stop loss below this trend line here, just 20 pips, and still, despite not being in at the earliest opportunity, you had over almost 250 pips of profit potential on that trade. Again, you could have trailed your stop loss and closed part of the position, allowed the rest to run. Certainly when you've seen price doing this around here, you would have been looking to get out. As the chop zone indicator came to the red side here, can see the ADX crossing with the red upwards as well. Price action, resistance, lots of indications to exit. Okay, so that's an example of using this indicator, the chop zone indicator, to trade in trending markets, buying in this instance in a bullish market. As I say, I wouldn't just use it on its own. There's literally thousands of different combinations of indicators and candlestick patterns and price action, Fibonacci levels, pivot points. Many ways you can interpret it. What works for someone might not work for someone else. This is a 1 hour chart, as I said. I prefer the higher chart time frames, 1 hour, 4 hour daily, simply because there's more price data and thus I find signals tend to be more reliable. That being said, you can trade the lower chart time frames. I just prefer less chart watching on the 1 hour charts, and when you can catch moves for 300 plus pips. If you were taking trades for 10 pips on the 5-minute charts, you'd need 30 trades, winning trades, that is, for the equivalent of one big trade in the space of a couple of weeks, if that, on the 1 hour charts. Okay, so let's see if we can find, well, a sell example we can straight away there. If you had rode this trend up, you may have wanted to ride it back down. As you can see, you have the red there again. You can apply the same principles as we did previously. That's interesting. That resistance level is currently where price is hovering around now. Interesting. So we're going to use it anyway. Okay, so I have the downtrend. I mean, you can see it using your eyes, but the indicator also helps to emphasize it. We can look to trade on a breakout. Let's just zoom in there. We can see this level here. See this trend, boom, boom, up, resistance, we're falling down. Bearish candlestick patterns, inverted hammer, spinning top, lots of red. Okay, this support level here is breached, becomes resistance, and then we have an inside bar and a big drop down. Bulls tried to fight back, and we continue downwards. Okay, again, it shows perhaps when the chop zone indicator is lagging. I mean, we can already see from this action that we just discussed, the market's going down, and then when it finally decides to turn red, we're well away with this particular downtrend. That being said, you can still enter sell trades on the pullbacks. Let's the ADX as well, as we were discussing before, when the red is above the green and the main line's above 20, there's some momentum. We have that there. Okay, that would have been extra confirmation. You could have taken the trade there. Perhaps you would have wanted to mark this level of support, see how price reacted when there. Did hold up, and then you could have traded the breakout of that, even the pullbacks to that line here and here. Support come resistance. Ample opportunities to trade that downtrend. What other indicators could you use? You could use Bollinger Bands perhaps. Let's put them on the chart. So with Bollinger Bands, we're looking to, you can trade breakouts of the lower band as we're selling. So when price breaks out and closes below, you can sell. Okay. Or you can trade sell trades when price breaks out the other side. we know what direction we want to trade. We're going bearish because we're in a bear market. So if the price breaks above the upper band, we're going to look to sell. As you can see, it closed above there, and that would have been a good sell trade. In fact, that coincides with around that resistance level we were talking about earlier, just for extra confirmation. Again, this just emphasizes the fact that price action can tell you things that indicators would do. So you don't need to over clutter your charts with too many indicators. The chop zone indicator admittedly does make things easier at a glance. Just you can zoom out and you can see, okay, red, we're going to trade short. Green, we're going to trade long. Then it's just narrowing in and timing that entry, whether that's with the Bollinger Bands, pullback, breakout of support and resistance, candlestick patterns. There's literally thousands of ways you can trade, whatever you feel comfortable with. Just make sure you've got sensible money management in place. Okay. Yeah. Well, there you go. This trend continued down quite significantly. I mean, this is an example of why you don't just want to take, you don't just see, oh, it's red, let's sell when price is down here. Oh, the chop zone indicators are, let me sell there at the low. Let me sell there at the low there because it's red. You know, oh, look, the indicator's gone green, let me buy and buy at the top. You don't. You need to use support and resistance, other indicators, you know, price action, chart patterns, just to confirm your trade entries. Okay. So if we continue on here, just remove that level. Again, look at the chop zone indicator, all nice and green here. Obviously, when we're looking at the chart, we're not seeing it like this if we're back here, but you can still, even if we were at this stage, you can see, okay, there's lots of green coming. Just remove the bands. Lots of green coming. We're going to be on a potential bull run here. It's still quite choppy if you're looking at it like that. However, if you wait patiently, and we're at this point, you can just mark, okay, well, let's just mark resistance, wait for the pullback. You have your pullback here, price to close above this resistance, nice and green here, and still lots of gas left in the tank on that breakout trade, over 400 pips. I mean, can certainly see the potential with this indicator, not as entry, not for entry and exit itself, but just to feel the direction you're going to trade in. Other indicators would be good for trade confirmation. The ADX we looked at, stochastic, CCI, Bollinger Bands. What else shall we look at? MACD. Should we put the MACD on the chart? Okay, so basically with the MACD, you're looking for price to be above the signal line for an uptrend, below for a downtrend. Not necessarily a downtrend, but a bearish. It could be just a candle. Okay, so when we had the breakout there, the MACD was above the signal line, which suggested there was plenty of opportunity to take, well, it basically confirmed that buy trade, let's say. Interestingly, this resistance level then became, support here, which is another strong indication. Of course, you can draw your trend line and look to trade on pullbacks. Just mark off. I see a nice MACD trade there. The reason I say nice on this one is because we've waited for a pullback. We don't want to buy at the top necessarily. Well, definitely not. For example, here, you're not going to say, oh, the MACD is above the signal line, let me buy. No, you want to wait for a pullback here, and then it crosses above, which you can see. Inside bar, nice bullish candles. Stop loss below the support level or swing low, and still over 200 pips left in that move. Okay. Even here, again, MACD lower, crosses above the signal line is still a good entry point. And the chop zone indicator, which is the purpose of this video, is green. I've just gone on a tangent there with other indicators and price action, candlestick patterns, money management, etc. just because I don't think you can have a chop zone indicator strategy without other indicators. I mean, some people may tell you, yeah, okay, buy when it's green, sell when it's red. You can do that if you want, but I'm pretty sure you're going to end up getting whipsawed in and out of the market more often than not. It's best to wait for a trend and to time your entry. Alternatively, you can trade ranging markets if you like. I mean, the chop zone indicator will show you ranging markets, probably for not long enough on this particular time frame. As you can see, we have apparently a ranging market there with those 3 blue bars, but I mean, what are you going to do in this here instead? Don't know why you bother with that when you have resistance 1, 2, 3, a triple top candlestick pattern there, wedge pattern, breakout to the downside, support becomes resistance here, nice red chop zone indicator. I personally think this indicator is lagging a bit, to be honest, but if you like how it looks visually, I can see how it would be appealing, but I don't think it's telling you anything that you can't get through just looking at the price and marking support, resistance and trend lines and putting a bit of effort into timing your entry. You could enter on the breakout or the pullback. The MACD again below the signal line here. Here, I mean, that's a good trade there, because if you're insistent on this all being red, you've got a nice red chop zone, MACD cross below the signal line, clear downtrend, we're coming away from resistance. And if that's not enough, we've got that support level there. Got 1, 2, 3, a triple bottom. And that's no surprise, there's a big breakout to the downside there. All factors considered. How much is that? What we're looking at? Over 200 pips. Again, could have moved your stop loss when price started to fall. You could have your stop loss here, then here. And if you were in this trade now, you could have your stop loss just above here. Okay, so you would have locked in on that breakout, 100 plus pips, and you have the potential, if it continues down, to make a lot more. You can close some of your position, see how it plays out. Anyway, hopefully you have an idea of how you can use the chop zone indicator to filter entries by the trend direction. If it's too much for your eyes, you can always just lower it down like that. Thank you for watching. Please like and subscribe for more. Catch you on the next one.